Welcome to the Money Cog weekly show. I'm joined as always with Imran from our analyst team. And once again, we're going to be discussing a company we've recently looked at for our premium service. You can find the full report in the description below. And as always, if you like this video, please remember to give us a thumbs up and subscribe to the channel. So Imran, hello, welcome.
Hi, good to see you again, Zaven. As I said, I think we were saying before offline, I seem to be wearing the same jumper in every single video, but don't worry, it's been washed every single time.
Okay, so earlier last week now, you released a new premium report for our subscribers on Hewlett Packard, or HP as it's officially called. Why don't you? I think everyone is familiar with this company in some sense. If you've ever worked in an office, I'm sure you've had issues with one of their printers. But why don't you give us a quick rundown of what this company does and how it actually makes money?
Yeah, sure, thank you, Zaven. So, as everyone probably knows, HP Inc. is a company that's a global provider of personal computing systems and printers. Started off in the early 90, or started off in the sort of the early 20th century, in sort of 1939 when someone called I think it was David. It was an individual called his surname was Hewitt, and then another individual whose surname was Packard, and hence the name Hewlett Packard. And together in the back of their garage, as most of these companies tend to be founded in the States, like all the other tech companies, it sort of started off with testing of specific electronics. So that's how it started. And today it's grown into a global business which sells, like I said, personal computers and also printers. And not only just within personal computers, you've got desktops, you've got laptops, and then with printers, you've got the actual printers, which are both commercial printers, and then you've got the home printers that everyone has, as well as the ink cartridges for those printers, or if you need laser, the laser refills that you need for those printers, and also paper. So all the sort of peripherals of that is also sold by HP. Um, and what I want to do is actually show you in our note, which the note I wrote last week, which you can find on the moneycog.com website, specifically more details around how they actually make that money. So if you just bear with me 1 second, I'll share my screen and we can sort of go in and sort of we can talk about a bit about the revenue split and how they actually make money. So if you look, majority of the money that Hewlett Packard makes actually comes from 68% comes from the laptops, and it comes from the desktops that it sells. So 68, so it's close to 70%, you could say, is coming from that. 30% is coming from printing, and a third is corporate investment. So the company splits their business model into three parts. One is personal computers, printers, and then corporate investments. Corporate investments is what they call HP Labs, and HP Labs is where they sort of do R&D into things like 3D printing, which we can talk a bit about later. But the idea is that that's where the future ideas of the business come from. So in itself, it's probably never going to be that substantially revenue generating, unless it gets things through sort of one-off research pieces, etc. But in itself, it's not really a revenue generator for the group. Now, what I found interesting was about sort of when you look actually deeper, you could say, well, actually, personal systems are really important to HP. It's the selling of notebooks and the selling of laptops. But when you sort of take a step back and you realize that actually, when you're selling a laptop or you're selling a computer, there's obviously huge amounts of cost that go into them because they're both hardwares. And what's more interesting about HP is it actually makes majority of its money. So when you take into account the costs, 87% of its revenue just goes into COGS. But when you look into actually the margins, it's the margins of the printing that actually fall through to the bottom line. So the printing segment has higher margins, although it's got lower overall revenue. So just putting that into perspective, it's because the costs, because within the printing, it's like a razor and blade model where they sell the printer, but they actually make most of their money on the ink cartridges, and the margins on those cartridges is very, very high because everyone needs them constantly. So it's like you can't get rid of it. You always have to go to them to get ink cartridges. I mean, there are obviously other ways, but majority of people do that, and that doesn't cost them that much, but they can charge a lot more for that because of the pricing power and factors. They can't go anywhere else. So that gives the higher margins, and that falls right down into the bottom line, which makes that segment more interesting. And when you compare the two, personal systems have a 7% operating margin, and printing has then therefore an 18% margin. So it's far more lucrative for HV. So you can start to say, well, actually, printing is a bigger part of the business in terms of actually from a revenue perspective and a business perspective being a strong moat for the business and something they don't really want to lose market share on. So that just gives you a synopsis of sort of how the company makes money.
Yeah, it's a good reminder that obviously when you're looking at revenue drivers, you also got to see whether or not those are translating into higher profits, because you can have a product that sells very well, but if the margins are terrible, then it does nothing. It doesn't really contribute to cash flows in the sense that, or rather, it doesn't really contribute to proper earnings.
And I think
so.
Okay.
Do you have a point you wanted to
No,
quickly
I
make?
think I was just going to make about Amazon and how actually Amazon used to drive down prices whilst it's not profitable. It was to gain market share to then dominate, and then through economies of scale, be able to sort of
Yeah.
sort of make better, better margins. But actually, we know from Amazon, majority of their margins and their business success is from AWS rather than necessarily the marketplace.
Yeah, it's all the cloud services and all the tech side of the business rather than the e-commerce platform that we all know it for. Okay, so let's be honest, selling printers and laptops, it's not exactly the most snazzy business model out there. And I think a lot of people consider it to be quite a boring business. But just because something's boring doesn't necessarily mean it's a bad investment. So how has the stock performed over the past couple of years?
Yeah, so as I sort of said, it's a it's a business which everyone probably knows quite well, and over the last 5 years, if we look at it, it's gone from around $17 sort of 5 years ago to sort of $39 or sort of around 30, the late 30s it's trading at right now. So you could say sort of close to sort of double its value over that time, which isn't too bad when you actually look at, we talked about revenue, but their revenues have been fairly flat. Revenues have been around 60 billion for the last 4 years. Just pre-pandemic, it's roughly hovering around the same amount. But I think a lot of that's due to the fact that it's 50% plus increase in earnings, and that all comes down to the point I mentioned earlier, which is the better margin businesses that it has. And we can talk a bit about what they do with that earnings later on, but that's the real driver of the valuation, and also actually the share buybacks. So the company has always done share buybacks, and actually this last year it did about 6.3 billion worth of share buybacks, and they continue to want to buy more shares. The CEO recently was speaking at one of these TV shows, these finance TV shows, CNBC, saying that they will continue to buy back shares because they think that's a good investment. Now, share buybacks are always great for investors and great for shareholders, but then you've also sometimes got to think, is it great for long-term success of a business which needs to constantly reinvest its cash to stay relevant? And we can talk a bit about that later and the concerns I have. But yeah, that's just putting it out there that it's great on the short term, but it might not be always great in the long term. It's always trying to give back to shareholders. So you've got to take into account the long term and the short term pains and gains.
With a company as mature as HP, it's not too surprising that they have quite an aggressive share buyback process. Here in the UK, companies prefer to take the dividend route, and obviously American stocks do pay dividends, although from a tax perspective, they seem to prefer the buyback approach. As you just said, buybacks are great for investors, but obviously this should only be money the company has no use for. And I think over the last 5 years, the shares outstanding for this business has dropped by like a third, which is very aggressive. And it begs the question whether or not they should really be investing more into sort of their HP labs, trying to find new ways of generating revenue in the future. Because, okay, I don't think the need for printers is going to disappear anytime soon, but with a lot of people becoming more aware of the impacts of the environment and trying to reduce paper waste and all this sort of stuff, and now we have digital documents, maybe we're not going to be printing as much in the future as we think. I think management have been investing more in the 3D printing side of things because there's some interesting applications there, which is positive to see. But there has been some critique for the CEO about some potential lack of innovation coming from this company. What's your take on that sort of feedback?
So the company's been led by the CEO Enrique Loraz for the last few years. He's been at the company for 26 years. I think he spent the majority of his career actually at HP. Sometimes it's a great thing to have a veteran in the business, but sometimes it's, are things really going to change, or will he just continue to iterate? You have iterations and you have innovation, and sometimes you might find that someone who's been with the business for so long, who's so ingrained into the way of which Hewlett Packard works, how much can he really move the business into a certain direction and come up with fresh new ideas, or 3D printing that we talk about, and actually the gaming things that they're quite interested in. Can such a leader really lead these different verticals and actually think about things? Because he's giving all the money back to shareholders. So in the short term, he's doing well, and we know that he's paid $6.9 million salary, which
It's
is not a small amount by any
it's
means, but
quite
he's
a
just quite a good amount, and he's got his shares of 40 million of shares of HP that he's got as well. So maybe he's doing a lot of things to drive the HP value up for himself. In the next sort of 1 to 5 years of
is
potentially his lockup periods, etc. Because the majority of his
it
wealth
is
is built.
a
Yeah.
Yeah, that is definitely a valid concern. Usually, when you see a veteran who's been with a company that long, you don't tend to see the sort of short-minded approach. But if he is getting close to the end of the career and he's trying to potentially maximize his compensation before he says a final farewell, then obviously that's a problem. Whether that's actually happening, we will see. But yeah, when you're seeing such a high level of share buybacks, and then you have criticisms of not enough capital being invested into new projects, then it does start to look a bit fishy.
I think HP has had problems with management in the past. If you remember, I don't know if you remember, but at one point they just suddenly said we're not going to do personal, we're not going to be doing laptops. If you don't remember, a few
I
years back,
remember that.
they
Yeah,
just suddenly just very, very strange pivots. And I don't know if that was, if I remember, it was the individual who used to be the CEO of eBay. Was that her name? Meg something? Was that at one point a HP
it
CEO?
rings a bell. Yeah.
Yeah, I'm not sure. So don't. We can always confirm that later on in the description below if that's wrong. But yeah, that's so they've always had these issues of strategy and the right direction they need to be going in. But I think the printing business has really helped them sort of
Yeah.
not really go bankrupt or go under, because they haven't always had the best personal computing systems over a long period of time.
Okay, let's try putting a bit more of a positive spin. Obviously, they've got the printers, which are doing exceptionally well. Do you think that division is driving a lot with terms of competitive advantages, or is there something else that they've got up their sleeve?
So no, I think that's a fair point. I think they did an acquisition for a gaming sort of company which sells peripherals, so the headsets, etc.,
Mm,
of a gaming company, and they spent sort of quite a bit of money on that. And that was an acquisition they made, which I think is a strategic move. And given where esports and gaming is in the future, and probably where personal computing is going to go, which is majority of personal computing will more likely go to gaming, because
mm,
powerful desktops, powerful laptops, you'll need strong gaming communities, gaming sort of computers, and they'll probably have higher margins because the prices of those will be much higher. I can see why they've done that. And actually, it's always the accessories which make huge amounts of money. So the right
yeah,
headsets, etc., all the peripherals, be a massive market. So that makes sense for them to be going into that. Um, and that sort of acquisition, it'll be interesting to see how they acquisition is always funny, because how do you integrate that into your bigger sort
yeah,
of brand? And do you do, which most companies have tried to do now, is let them have their own brand identity and just be a part of you. But you look at when Apple bought Beats, and it sort of
yeah,
had a separate division. But if you notice, Apple's headphones today are their own. They don't actually have any
yeah,
affiliation with Beats. They still carry on with Beats, but Beats, I think, is a very small percentage of that headphone market that Apple has. AirPods are a
yeah,
huge market for them. So yeah, I think there is going to be. I think that's going to be an interesting element of sort of new potential revenue streams. And then 3D printing is another one, which they're sort of
yeah,
going through HP Labs and figuring out, okay, how do they get into that space? Because I do think that printing is only going one way, which will be south. I don't think there's
mm,
going to be huge amounts of that margin, or that above average margins that they've achieved with 18% is more likely to come down over time, just because the lack of needing for printing. So they need to innovate around
yeah.
3D printing and additive manufacturing.
Yeah, well, it's definitely something to keep an eye on. I think we've at the Money Cog, we've seen that larger acquisitions they they can work out, but more often than not, they can lead to quite a few issues, especially when it comes to like giant corporate mergers. Because when you're okay, HP's not going through a merger, but they are spending quite a bit of money on this gaming space, and if it doesn't work out, if they start having integration problems or unusual expenses start coming up that they didn't foresee, then it could actually end up destroying value rather than creating it. So we'll have to keep an eye on to see how they're doing.
Exactly.
That aside, what would you say right now I mean, HP is a big business. It's unlikely that it's going to suddenly go bankrupt one day. We've already discussed the issue with it potentially becoming irrelevant over the long term if it doesn't adapt, and it looks like management are doing something about that. But what would you say is the biggest threat to this business today?
Biggest threat is, we mentioned it already a bit, is I do worry about the share buybacks and what they're doing with that cash and being able to be competitive in the future because of where printing is going in the medium term.
Yeah,
I think the long term is, I think given where the world is today about supplies and actual supplies of materials, that might be a bigger issue for them, sort of in the short term to long term, is how well can they adapt as a global company to global supply challenges, given potentially what could happen in the war in Ukraine and how that escalates
yeah,
globally and the impacts of that, and also just generally how does that sort of mean for people, when it comes to buying hardware wares from different countries, etc., might have an issue. But yeah, ultimately it's supply, but then it's also brand. And you look at today, you need to constantly be reinvesting in R&D to survive, because personal computing is constantly changing. You used to have Sony at one point, which was doing great laptops with the Sony via, it goes through a period of certain companies dominate, and you have to constantly be at the cutting edge of where the opportunities are. And I think this gaming acquisition should help, but we're still in early days and yet to see what will happen. But sort of having long-term strategy and a focus of within personal computing where they really want to focus on would really help. But we already
yeah.
see that, HP laptops are, if you look at the best laptops of 2022, HP has quite a few laptops on those lists. So clearly
Mhm.
it's with consumers quite well regarded.
They're doing
Um,
something right,
yeah,
and that's obviously helping their brand as well. So
you probably look at the closest competitor is probably Dell, and you look at the
yeah,
margins that we've got. When we've got a competitor slide on our note, and you see margins of Dell are, of HP is double that of Dell. So clearly, it's a better margin
this is
business,
yeah,
and that's probably because of the printing. But yeah, they've got cash to potentially do interesting things like we've talked about, which is HP
yeah.
Labs. So you really do hope that they do start to, rather than rather than giving back always through share buybacks, they start to do long-term plans of growth. And we yet to see what those will be. But yeah, it's definitely one to it's definitely, these are the concerns I have. But hey, look, this is a business which is generating great free cash flow. Whilst revenues are flat, they've been able to mass double, 50% increases in earnings. So from that perspective, it's generating cash and giving it to shareholders. So it's quite attractive.
Yeah. Okay. Well, with all that said, would you say roughly the valuation today makes sense, or is it a bit market being too ambitious, or maybe not being ambitious enough?
So I think we take that into account, and given where we've had the sell-off in tech, you do a DCF model, which we did because I did because of the cash flow generation of the business. This year's revenues are what sort of, assuming next year's revenues are around 68 billion, so slightly higher than this year's. Year following that is 82, and then you've got terminal value, which you can find a bit more in the notes. You get to a sort of $51 valuation, so there is a nice upside to
Hmm.
to where the shares are today. And actually, as we discussed below, it's actually, you're buying a business which you can say is fairly valued, but a strong brand. It's a strong moat. We've talked a lot about the brand, but also the fact that you've got a hardware printer and then you've got sort of the cartridges. That's the razor blade model. So that cash
Hmm.
that they're generating, they can do a lot with that. And it's always great for a business to have options. It's better than a business to have options like that than to be raising money and debt to kind of figure out how they can grow out
Yeah.
and innovate through other ways. They've got a lot of cash that they're generating to solve these problems. And I think that's a great thing, is businesses which are massively cash flow generative, they can have potential to do quite a few things. And I always find those businesses a bit more
Yeah.
interesting than businesses which are growing fast but huge financial problems, meaning are they going to have to raise
Yeah.
more, do a rights issue, do a debt issue to be sustainable? They're
And in a
carry on.
time now where we have interest rates going up, I think the Federal Reserve has now outlined its plans for 2022. It's going to be doing up to 6 more interest hikes this year, which is,
Yeah,
for a company generating lots of cash, this is not really a problem because they can absorb those costs, and if they're not reliant on debt, then it's irrelevant. We often see when interest rates rise, tech stocks in particular, especially the ones that are trading at high valuations, they tend to suffer, and then it gets a bit complicated as to how that all links together. But essentially, the demand for returns from equity investors goes up, so suddenly valuations get dragged down in the process, and then that creates more problems, especially if the one's not generating lots of cash, because their ability to essentially raise money by selling the additional stock at a high price is gone. So
Exactly.
they either turn to more expensive debt, or what do you do? It's just this is why cash flow is so important.
Yeah, and I think what's something we focus a lot on, and we're not going to mention the COG score, which is a measure which you created, which is unique to the Money Cog, which basically ranks a company between 0 to 100 on qualitative and quantitative measures. You can find more information on the website. And this, got quite an attractive score on those measures, where free cash flow is one, has relatively low amounts of debt, and all the other qualitative measures have been quite strong for this business. So I think it's probably something people wouldn't think of. HP, it's not a Tesla, it's not a household sort of name at the moment in terms of, oh, it's doing really well and revenues are growing. It's like I said, revenues are growing fairly flat, but earnings have done really well, and it's actually a great business to own. When you start thinking from a cash flow generative perspective, and how strong are those cash flows going forward. And I think there is fair predictability in the next few years that it will be around for some time, and it's investing into new areas. So definitely something to look at in your portfolio.
Okay. Well, thank you very much for going through all of that, Imran. It's always great talking to you and getting your insight on these sort of complicated, well, in this case, not so complicated company.
Likewise.
Thank you very much for tuning in, everyone. If you liked the video, once again, please give us a thumbs up. It helps us out massively. And if you'd like to see more content, don't forget to subscribe. There is a link to the full report in the description for those who want to have a look. You can access it for free.
Yep.
Until then, we will see you again next week.
Take care.